Good morning and welcome back to Almus Market Mornings. The dollar index slipped after the ADP jobs report came in below expectations and US services activity unexpectedly fell short of expectations, both fueling talks of potential Fed rate cuts. Just yesterday, we flagged how the JOLTS data can be volatile. Now, with the ADP print, the outlook looks even murkier. Gold caught a bit on the back of this, while the dollar remained under pressure. But despite the softer greenback, the rupee bucked the trend, breaking out of its familiar range to trade as low as rupees 86.02 yesterday. Morning, JK. Does this signal real weakness in the US economy that could trigger cuts? And how are you reading yesterday's sharp move in the rupee?
Good morning, Swaraj. See, the dollar reaction yesterday, the data was, I would say, on the weaker side, but definitely not a slump. The reason because a lot of these numbers have been discounted. Like, the weakness, emerging weakness in the employment and services activity or overall economic activity is quite anticipated. Therefore, we are not seeing that kind of reaction. Even if you look at the yields, also they did slump by 10 to 12 basis points, but they were from very highly elevated level, and you might well see again a rebound in the yield because we have the ongoing discussion about the budget and higher deficit and all that. So I don't think that gives so the real trigger for dollar to fall further through the recent lows will be if the unemployment report on tomorrow confirms the slowdown in the employment situation, because you don't rely on this ADP number, which doesn't carry much positive correlation with the actual numbers. And even the JOLTS data was mixed, of course. Weekly jobless claims numbers have been quite volatile, up a week and down a week. So yeah, I think I'll give this Friday's number a much more uh, uh, you know uh, importance. And of course, this is despite the fact that Fed's own assessment of various regions as per their beach book was not good. All districts reported elevated levels of economic and policy uncertainty, leading to hesitancy and cautious approaches among the business and even the household decisions. So overall data yesterday, ADP number was at 37 versus the revised number of 60 of last month. Expectation was 110, and ISM services below 50. That's contraction territory. First time, since June 2024, and at the same time, prices paid were higher, new orders were down. It kind of indicates a stagflationary situation. So, as I said, these are the kind of numbers that have been expected by the market, and probably we need some larger trigger for dollar to get into a bigger downtrend. That's why you are seeing not much headway on the downside yesterday. And otherwise, even the stocks also did not make much headway yesterday because the slowing economy does not help the sentiment for the bulls. Uh, and the only movement that we saw yesterday was yen, which came 1.5% lower because the yields narrowed, yield difference narrowed. Japan likely to hike. Then Canadian rate decision was to hold and at 2%, sorry, 2.5%. Uh, but again, there is uncertainty about future decision. The governor indicated that the ongoing trade war with the US remains the biggest headwind facing the Canadian economy. If there is a recession, as many analysts expect in Canada, they may again cut also. So, but in the near term, Canada dollar rebounded more than others because of hold on the rates. Yuan stood out slightly. It has once again recovered to 7.17 levels. This is on expectations of positive outcome from Trump Z phone call that has been scheduled for this week. Yeah, at the same time, not much encouragement from the Chinese, Xiaxin services report, as well as the manufacturing, which was somewhat subdued. Even if you look at the Chinese yuan, it has been quite undervalued in the sense that all these 3-4 months we have seen dollar fall against major currencies, in many of the emerging market currencies, Chinese yuan has hardly moved 1.5 to 2%. And that has resulted in Chinese trade weighted yuan basket index actually falling to its lowest level since April 2022. So Chinese yuan is very much undervalued. And if we see a real dollar fall, it is Chinese yuan and the yen that needs to be watched out. This is my overall view on the currency, on the dollar. As far as the rupee is concerned, we have we did indicate that now this is moving between 85 86 range, and that is happening. What is supporting? Two things are supporting. One is the ongoing repatriation by long-term investors of their stake sale. FI numbers have been negative for the last four sessions. Not very big, but they have been negative. And of course, there is a section of the market which feels that with RBI cutting tomorrow, quarter certain, half maybe, this narrows down the difference between India and US yields. In fact, the India US yields is lowest in the last 21 months. So that can actually lead to more weakness in the INR. So that I would like to wait and see. I will not be in that camp right now, but because the dollar also is weakening because of several other reasons, and Fed itself might change their stance quickly if there is a better negotiation between countries and tariffs fall to a lower level across the region. So this is the reason why I feel USDINR still holds this 85-86 range. Yes, of course, if 86.10 breaks due to any specific flow, we might see 86.50, but I think that really is the cap for the USDINR. Yes, as we enter Thursday, we are entering into a period of very strong, very thick calendar. We have ECB meeting today, cut of 0.25% discounted. What they say about future rate moves is important. Trump administration is also had also given a deadline for countries to submit their best offers on trade by Wednesday, the US time Wednesday, of course. So that is something that we would be watching out for. Not to forget that unemployment report will be out tomorrow, giving some better indication of the situation in the US. So overall, dollar is quite weak, already been sold, but really requires some checking reversal in the data situation or the economy to prompt a rebound. Otherwise, it's going to be on the downside, definitely for me. Thank you.
Thank you, Rick. And I think, as you mentioned, dollar remains weak, but the data released in the last 2 days, ADP and JOLTS, I think, as JK mentioned, that's more or less discounted, and markets would be looking for a confirmation through the NFP and the unemployment figures that are to be released tomorrow. Even the Fed Beige Book, which was released, showed all districts in the US reported uncertainty due to policies, both industries and households. ISM services was below 50, contractionary territory. So a breakout in dollar index really requires a more significant data, uh, at least more significant than what has been released as of now. For the rupee, FI numbers have been negative for the last 4 days, along with an expected cut, RBI rate cut tomorrow, 25 basis points, highly possible, and 50 basis point, uh, even expected by some market participants, has resulted in the rupee weakness. And the key event today to look out for would be the ECB meeting, where a rate cut by 25 basis point is expected. Eyes would be on the future outlook, and that would be keenly watched. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.